Guys, yesterday the S&P 500 made a new all-time high at 6671.82, and all of this has happened because on Wednesday the 17th of September, after the FOMC meeting, which was either hawkish or neutral, not dovish. But before moving into this the bullish direction, the S&P 500 has fulfilled its technical obligation to the 655X. In the previous S&P 500 weekly technical analysis, I mentioned that S&P 500 will have to come down to the 655X because there was the technical obligation. And this condition of the bearish or the bearishness, it has come into the picture after Tuesday. So the combined movement of Monday and Tuesday was very limited compared to the Friday's closing. And in my first update on September 16th, on Tuesday, I mentioned that the S&P 500 is expected to trade in between 6,600 and the 662X, means there will be a very limited movement on Tuesday. So the low was 6,600.11 and the high was 6,627. And on Wednesday, this was the press conference of the Fed chairman. Okay, before the press conference of the Fed chairman, I mentioned this to my Patreon community members regarding the numbers. At that time, the numbers were 664x in the bull side maximum, and in the bearish side the zone 655x zone with a possibility of 649x. Okay, but this 649x will come into the picture when the S&P 500 loses the zone and fails to recover the zone. And all of this was given before the press conference started. So on Wednesday, the S&P 500 during the press conference came down and the low was 6551. Okay, our zone was in the 655x, very heavy zone. The most important thing on Wednesday was the closing. Okay, what was the closing? 6600.35 or 36. This was the closing on Wednesday, and this closing was very important because on Tuesday, on Monday. Okay, so considering Monday, Tuesday, Wednesday, there were 3 consecutive closings, daily closings above 6600 mark. So this was my pre-market analysis to my Patreon community members on Thursday. Okay, in this the pre-market analysis, in this point number 6, I mentioned that because it closed above the 6600 psychological mark, this means that the S&P 500 has come into the bullish condition. However, irrespective of anything, the bullish side will remain limited. Okay, because the bullish side is not sustainable. Maximum it can move to or around 6655. What was the high on 18th of September? 6656.80. Okay, what I was expecting, 6655 to or around 6655. Okay, so it moved up and then it failed and it came down. But the most important part of this closing on Thursday is that this closing was above the 662x. Okay, there is the heavy support range. This has further confirmed and cleared that there will be the bullish movement on Friday. So this is indicating more bullish movement in a manner that on Monday we are expecting a gap up open, or irrespective of any open and initial or intraday bullish movement, but there will be a problem because of the saturation, overbought. Okay, these are the conditions. So now how exactly it is going to work in the next week? Okay, to what levels it can move up, and when it comes down, then to what level it will come down. I am going to discuss all of this in detail in this S&P 500 weekly technical analysis, which is for the week of September 22nd, means from September 22nd, which is Monday, to September 26th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now guys, before I proceed further, let me tell you that I have divided this S&P 500 technical analysis in 3 parts. First part is the weekly chart. I will show you the weekly chart. I will show you the technicals on the weekly chart. Weekly chart is a long-term picture. Okay, means what is going to happen in the long term, and also through the technicals I will show you if there is any more room in the bull side through the weekly chart or not. Second part is the daily chart. Daily chart means the short term picture. Okay, short term picture means what is going to happen in next 2 to 3 days or 4 days. Okay, or a short term reversal or a short term bullish movement. Okay, just the short term only, the daily chart. Daily chart is actually creating the problem. Okay, through the technicals I will show you, okay, that the problem. Third part is the probable movement. Probable movement means how the market is going to behave, how the Wall Street, how the S&P 500 and the entire US stock market is going to behave or is going to move in the next week. Okay, what will the bullish condition, what will be the bearish condition, what will be the tiebreaker, what will be the marks, the levels or the conditions, bullish, bearish, all of that in this the third point. So now I am going to begin with the weekly chart. So guys, this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now let's first discuss the candle. Okay, weekly candles are very important. Okay, so if you notice, the high of the candle was 6671.82. Okay, and the closing was 6664.36. The closing is almost equal to the high of the candle. Okay, a little below the high of the all-time high of the candle, but was above the high of the Thursday. Okay, what was the high on Thursday? 6656.80. And yesterday in my final update, okay, I mentioned that closing of the SP500 above the yesterday's all-time high, means the Thursday's all-time high 6656.80, means a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. So this was the candle of the S&P 500. Now let's analyze the last candle of the Dow Jones. So this is the last candle of the Dow Jones. The high was 46,396 and the low is not actually equal, or not is actually very near, sorry, the closing was not actually equal or very near to the high, the all-time high of the Dow Jones. Okay, in this manner, but because the closing of this candle is above the previous weekly candle of the Dow Jones, and also the Dow Jones is now trading at the all-time high level, because of that a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, so this is also confirmed through the weekly candle of the Dow Jones, right? This means that now it's clear that on Monday, irrespective of anything or irrespective of any open, there will be an initial or intraday bullish movement on Monday. Clear? Now let's analyze the technical indicators, and through the technicals it will be very much clear, okay, that how much room is there in the bull side, whether it is saturated or not. Okay, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones in a manner to the entire US stock market every day from Monday through Friday, okay, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. In terms of the technicals, the S&P 500 is bullish through the Ichimoku cloud on the weekly chart. It is bullish through the moving averages on the weekly chart. It is bullish through the Bollinger Bands on the weekly chart, and the S&P 500 is bullish through the stochastic RSI on the weekly chart, and is also bullish through the MACD on the weekly chart. So overall, the S&P 500 is 100% absolute bullish through all of the indicators, and the indicators are about to hit the saturation. This means that any more bullish movement or any more bullish addition in the S&P 500, okay, whether it happens on Monday, Tuesday, any day, okay, means any movement above 6664.36 or .37 will add more saturation, or will force the S&P 500 on the weekly chart to hit the saturation or the absolute saturation. Okay, this saturation will create the problem in a manner that even though the S&P 500 looks bullish, absolute bullish, and the sky is the limit, but because of this saturation or absolute saturation, okay, the S&P 500 will have to come down, will have to give up, okay, and this time again it is expected to enter into the short term bearish reversal, short term reversal. Okay, long term that may or may not be there, but that will be derived or will be defined through the short term. Okay, but at least the short term. Okay, when I say the short term means again the 655x. Okay, that will be the short term, or even below, in order to fulfill its absolute technical obligation below the 655x, that will be the short term. So S&P 500 is 100% absolute bullish on the weekly chart. Now let's analyze the weekly chart of the Dow Jones. The Dow Jones is bullish through the moving averages on the weekly chart. Dow Jones is bullish through the Bollinger Bands on the weekly chart. Dow Jones is bullish through the Ichimoku cloud on the weekly chart. Dow Jones is also bullish through the MACD on the weekly chart. Dow Jones is also bullish through the stochastic RSI on the weekly chart. Okay. Now saturation is as of now Dow Jones is not saturated. It is not going to hit the saturation, but the Dow Jones is going to hit the overbought condition. Okay, and this will be the overbought condition will be the first time, means it will hit the overbought condition for the first time in the year 2025. Okay, so last time it was year 2024. Okay, almost the same September, October, when the Dow Jones hit the overbought condition. Okay, or any other kind of saturation on the weekly chart, and now it will hit the overbought condition. When it will hit the overbought condition? When the Dow Jones moves above 46,315.28, which was the Friday's closing. So any bullish movement or any bullish addition, okay, will force the Dow Jones to hit the overbought condition for the first time in year 2025. Okay, this means that this overbought condition or this heavy condition in the Dow Jones, and then the saturation condition in the S&P 500. This means that the market and Nasdaq is already trading at the saturation. This means that all of the three indices are trading at the saturation, and this would be a perfect scenario, okay, for a short term reversal or a little more than short term reversal. Okay, now it may happen on Monday, or it may take the entire week until Friday. Okay, so it will depend on certain factors, okay, on some conditions, because see, if there comes any more bullish movement on Monday, then it will hit the saturation. This is what we know. Okay, but this is a weekly chart. Okay, and a weekly candle forms from Monday to Friday. The open price of Monday will be considered and the closing price of Friday will be considered. This is how the weekly candle forms. However, in the next 5 days, okay, on the daily chart, because it is already trading near to the saturation, okay, this means that if there comes bullish movement like on Monday, Tuesday or so, bullish movement in the entire market, and the S&P 500 or Dow Jones or these indices hit the saturation on the daily chart also, then by default the saturation is already there on the weekly chart. Now it has hit the saturation on the daily chart. This means a perfect cocktail, perfect combination for a fall. Okay, this will be there. So in this manner, the S&P 500 is 100% bullish on the weekly chart. S&P 500 is 100% bullish on the weekly chart. Dow Jones is also 100% bullish on the weekly chart. Okay, the problem in the Dow Jones is the overbought condition. The problem in the S&P 500 is overbought, saturation, and heavy divergence. All of these are conditions. Problem in the Nasdaq is that it has already hit these are conditions. Okay, it is already there. Now the S&P 500 and Dow Jones are catching up. Okay, first it will be S&P 500, then it will be Dow Jones. Okay, this means that intra week, okay, we can expect a fall. Okay, we can expect a fall because now that there will be an absolute bearish condition when the S&P 500 hits the saturation on the daily chart also. Okay, because by default it will be there on the weekly chart. When it hits on the daily chart, then fall, intra-week fall will be there. Okay, and now when there will be any fall, this fall will be good. Okay, a good fall will be there. There will be only one condition in which the S&P 500 and the entire market can save itself and may not give a fall, rather it can actually give a green candle or a little red candle, just like this, a little red candle. Okay, so that I will discuss in the last point, the probable movement. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market. So I give these the daily updates every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, in the form of pre-market analysis. Then the first update, then the midday update after 3 hours, then the final update. And that's not all, because I also give the opportunities in the premium stocks, okay, or the ETFs, stocks and ETFs, okay. I gave, okay, these kind of recommendations, okay, everything in this manner. And that's not all, because I also give the midweek update. This midweek update is actually a video technical analysis, and it is given every Wednesday or Thursday. So I discuss all of the numbers, levels, each and everything in detail in this the midweek update. So guys, in order to get all of these, the daily precise updates, the stock market opportunities in the premium stocks and the ETF, and the midweek update, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my profile, you will see this button that says membership options. When you click on this button which says membership options, then you will find three membership option: level 1, level 2, and level 3. Okay, level 1 and level 2 are same. The only difference is the geographical location when you subscribe. This level 3 is special because whatever you are going to get here by default, all of that you will get here in this the level 3. Then there will be one-on-one Zoom video meeting. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, Nasdaq every day from Monday through Friday, pre-market analysis, first update, second update, midday update, final update, and the stock market opportunities in the premium stocks or the ETFs, and the midweek update. So in this manner, they are very well aware of what is happening, what has happened, what is going to happen next, and why that will happen. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the daily chart. This is the second point of the agenda, the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Now let's first discuss the candle. This last candle formed on Friday, 19th of September. It is a good bullish candle. Okay. Now there is heaviness in this candle. Why? Because this is the candle which has given the all-time high to the S&P 500, and the all-time high is 6671.82. Okay, and also the closing of the candle is above the previous candles or all known candles, especially the Thursday's candle. Okay, this is why this candle is very heavy and is heavily bullish, indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, clear? Now the daily candle of the Dow Jones. This daily candle of the Dow Jones is again, okay, it's a good bullish candle, because this is the same candle that has given the all-time high to the Dow Jones. However, this candle has failed. This candle has failed to give a closing above the previous candle. Okay, in this manner, this candle is not indicating a gap up open. This candle is simply indicating an initial or intraday bullish movement. That's it. Okay. Now, considering all of the candles on the weekly chart and the daily chart of the Dow Jones and the S&P 500, it is now quite clear that on Monday there will be a gap up open, or irrespective of any open, there will be an initial or intraday bullish movement on Monday. Even if there comes a gap down, then also either initially or intraday it will move up. Okay. So, and once it fulfills its obligation, then it is free to trade bullish or bearish. Okay. Now let's analyze the technical indicators, and this is where the S&P 500, okay, it becomes risky, and it is actually the Nasdaq which is more risky as compared to the S&P 500 and the Dow Jones. Why? Because see, yes, in terms of the technicals, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, Nasdaq every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, the S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the Ichimoku cloud on the daily chart. S&P 500 is bullish through the moving averages on the daily chart. S&P 500 is bullish through the MACD on the daily chart. S&P 500 is bullish through the stochastic RSI on the daily chart, and the S&P 500 has hit the overbought and the saturation. Okay. So see, one more thing, there is good divergence in the MACD. So all of this indicates that the S&P 500 is 100% absolute bullish on the daily chart and is also saturated. Means any more bullish addition on the daily chart will make it more saturated. Okay, and then if not by Monday, then by Tuesday it will hit the absolute bullish saturation. Okay, absolute bullish saturation means, so it is just like on Tuesday, on 16th of September, when I mentioned, okay, that the bullish side will be limited, will be restricted and will be limited to the 662x. Okay, whereas the bearish side to the 6600, means there will be a limited movement, but this limited movement was because of the conditions seen on 16th of September, Tuesday. However, in this case, okay, there was the saturation also, but in this case the bullish side will be limited because of saturation, but the bearish side will not be limited. So 100% bullish but saturation. Now comes the Dow Jones. So on the daily chart of the Dow Jones is also bullish through the Ichimoku cloud. Dow Jones is bullish through the Bollinger Bands on the daily chart. Dow Jones is bullish through the moving averages on the daily chart. Dow Jones is bullish through the MACD on the daily chart. Dow Jones is bullish through the stochastic RSI on the daily chart. And the good thing is that the Dow Jones has not hit the saturation or the overbought conditions on the daily chart. Means there is actually bullish room in the daily chart of the Dow Jones. Okay. However, on the weekly chart, the Dow Jones has hit the overbought condition. Okay. Or it will hit that condition clearly when it goes bullish, okay, on Monday, as early as on Monday. Means any more addition to this price, the last closing price of 46,315.28 of the Dow Jones, will add more saturation on the weekly chart. But because the Dow Jones still has some room on the daily chart, this means that the Dow Jones can still hold and absorb that saturation on the which was seen on the weekly chart. So Dow Jones, as of now, Dow Jones is the most stable index which has the room to move and to sustain in the bull side. Okay, whereas the S&P 500 is not. S&P 500 is clearly, okay, there is a problem on the weekly as well as on the daily chart. Okay, so Dow Jones is also 100% absolute bullish, but it is not in that kind of problem. Okay, what the problem that is seen in the S&P 500, okay, and the Nasdaq. Now guys, before I move to the last point of the agenda, that is the probable movement, I have this important information to share with you. This is my S&P 500 knowledge transfer program. Okay, through this program I teach, okay, whatever I have learned, okay, all of my observations, all of my research, I will teach you all of that, okay, through this program, and I will help you become self-reliant so that you can trade carefully, comfortably without any external help. Okay, because in this program I will teach you everything from basics to advanced, like basics of the market, okay, technical indicators. I will help you set up your charts, trading strategies. I will teach you how to analyze the market. I will teach you the options, the basics and the advanced of the options, the option strategies. Then I will teach you, or I will share with you the support and resistance levels. I will teach you how to predict the price, okay, price prediction, and how to analyze the trend, how to understand the manipulation, if the manipulation is happening in the market, and how to convert the manipulation trap into the opportunities. Then the hacks, these hacks have very high accuracy, and even I use these hacks in my daily predictions or in my weekly predictions. And these are some basic terms and conditions. These are the snapshots of the meetings. So guys, whenever you want to participate in this program, Or if you have any question, okay, then this is my email address. You can simply send me an email, and I've given the link to this Google spreadsheet in the description of the video and also in the comment section. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones in a manner to the entire market. In the next week means the week of September 22nd, means from September 22nd, which is Monday, to September 26th, that will be Friday. Okay. Now, first thing first, the next week is kind of blank. Okay, it is blank until Thursday morning, because Monday, Tuesday, Wednesday there is nothing much. On Tuesday there will be some speech of the Fed chairman, but that is now that is not expected to impact the movement of the market much, because the Fed chairman has already cleared, okay, on last Wednesday he has already cleared, okay, everything, all of the questions regarding the inflation, the rate cuts. Okay, now Thursday morning the retail sales data will be released. Okay, this retail sales data will tell us whether the economy is doing well or not. Okay, then comes Friday. Friday morning, the inflation data, the PCE and the core PCE data will be released. So in this manner, the Friday will be heavily volatile. Okay, yes, there is one more thing. It's not just Friday, but on Thursday, okay, when the retail sales data will be released, on Thursday also the GDP data, okay, for the last quarter, okay, the final data will be released. Okay, now the last time it was, I think, negative something, and the Wall Street is expecting some improvement. If that improvement is not seen and it still shows negative data, then this means that the economy is not doing well. Economy has, or there is weakness in the economy. Okay, because of that the market may give a counter reaction, a very heavy counter reaction. This means that the market, the entire US stock market, okay, the Nasdaq, okay, S&P 500, Dow Jones, okay, Wall Street has 3 days, Monday, Tuesday and Wednesday. And if there comes back to back green candles on Monday, Tuesday and Wednesday, this means that the Wall Street is expecting something bad to happen. Okay, that is why there is a unidirectional movement, because back to back two candles will saturate the technicals on the daily chart that I have shown you, okay, on the daily chart section. And as early as on Monday it will saturate on the weekly chart. And if still the market is trading bullish and trading against, this means that the market is in hurry, because market is now expecting that the GDP is further going to contract. Okay, and this is when the technical definition of the recession comes into the picture. Okay, 2 quarters of negative the GDP. Okay, well, it will be very much clear on Monday. If not on Monday, then by Tuesday, okay, whether the market has any chances or any good chances of to come down or not. Okay, but a unidirectional movement in the market means that definitely something is not good, and the market is now trying to catch up, or the market is now trying to build some kind of trap or something. Okay, so on Tuesday the GDP data and the retail sales data, then on Friday the PCE, the inflation data. Both of these data will be very, very decisive, because any movement, any upward movement in the inflation means that Feds may not give 2 rate cuts in the 2 meetings in October, December. Rather, there may be just 1 rate cut. Okay, that too only 25 BPS. Okay, and then there is or in the October meeting there might come a pause. Okay, means there will be a very, very conflicting, okay, very confusing situation. Now in terms of the numbers, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to trade safely, and if you want to trade carefully, you want to get all of these daily precise updates of the S&P 500, Dow Jones, Nasdaq every day from Monday through Friday. Okay, along with the premium opportunities in the premium stocks, okay, or the ETFs, okay, of the US stock market. Okay, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the numbers, what we know is that as of now, the S&P 500 is saturated on the weekly chart and is saturated on the daily chart. This means, or this limits the bullish side movement. Okay, the Dow Jones is saturated, kind of saturated on the weekly chart, but the Dow Jones is not saturated on the daily chart. Daily chart still has some more room in the bull side. This means that the bullishness means the Dow Jones is actually in a condition to sustain in the bull side. Okay, because of this unique condition. But the S&P 500 is not. S&P 500 and Nasdaq, okay, they are not in this condition. Now, because it has made, the S&P 500 made an all-time high at 6671.82. Okay, and now it is heading to the 6700. 6700, from this the closing is like 0.5%, 0.5%. Okay, there comes the numbers. There comes a number 6697. 6697 is my calculated level. Okay, it is my calculated resistance, or it is my calculated level. It will be invoked or will come into the picture when or if there comes a closing above this is the all-time high. And one more thing you must understand. Now, any more bullish movement to happen in the S&P 500 or in the Dow Jones, any more bullish movement to happen, the closings of the Dow Jones or the S&P 500, okay, that closing must be above the previous closing. For example, the S&P 500 on Friday closed above the previous closing, previous high, not closing, previous high. Previous high on Thursday was 6656.80. On Friday the closing was 6664.36. Okay, this kind of condition, only and only this kind of condition will help the S&P 500 to move up. Okay, because if the S&P 500 try to move up, it breaches the all-time high but closes below the previous high of the candle. In that case, this means some struggle. Okay, this means that momentum is now not that heavy as it used to be. The same can be seen in the Dow Jones, because see, now the Dow Jones closed below the high of its previous candle. This means that now when the Dow Jones try to move up, there will be some struggle in the Dow Jones. Similarly, the S&P 500. So this is clear that for any bullish movement to happen, the S&P 500 must give a closing. I am talking about the closing. I am not talking about a breach. I am talking about the closing. Intraday it can breach, not a problem. Okay, but the daily closing must be above the previous high. Okay, doesn't matter whether the closing is just by 1 cent or 10 cents or $10, doesn't matter, but the closing will be, for example, this was, yeah, on this day, on Tuesday, the low was 6600.11. The S&P 500 saved itself just by 11 cents. Okay, the next day it was in the condition. Next day, on Wednesday, on the FOMC day, the S&P 500 closed at 6600.35. It saved itself by 35 cents. Then we have seen bullish movement. Okay, similar to that, the closing must be above the previous closing. Okay, in this manner it can move up to what? It can move up to 6697. When it reaches near to the 6700 psychological mark, okay, then it will automatically, okay, by that time it will be, technically it is already unstable, technically it is already saturated, okay, but in this manner it will further hit the saturation, it will further, okay, it will become unstable, right, by the time it reaches to the 6697. So this means that a 6700, a hit to the 6700 may not happen in the entire week. Okay, the only condition it can happen is that if the S&P 500 spends at least 2 days and gives at least one good bearish candle on either on Monday or Tuesday or Wednesday, must give a good bearish candle and remains around these the levels, okay, remains above the 6650, it remains above the 6650, closings are seen above 6650, there must come 1 or 2 red candles, okay, then only it will come out of the saturation a little and will be in a condition to move to 6697. Otherwise, if it try to move up, okay, in this manner, then it won't be able to sustain, okay, around 66.97, or it won't be able to hit the 66.97. Okay, it will stuck in the 668x range and it will come down. Okay, now some of you might be thinking that there is not much, okay, gap, or it is like the 66.97, okay, it's just like 20 or 30 cents, okay, from this the last closing, or from this the all-time high, okay, of 6671.82. However, you must understand that in the stock market even 1 cent can make a difference, and we have seen that difference here when by 11 cents it managed to save itself on Tuesday, then by 35 cents it came into a heavy bullish condition, right? So even a 1 cent can make a good difference in this the movement. Bullish movement is 6066.97 in the bull side, okay, my calculated level. After that it will be the psychological level 6700, and by the time it reaches to this level or the 6700, it will be unstable. It will hit the all kind of saturation, all kind of overbought conditions, and if this happens before Thursday, okay, and then Thursday there comes a bad news regarding, okay, there's the GDP, or on Friday there comes the inflation which is not as per the expectation, then by default it will fall. There will be a heavy fall intraday. Okay, within one day it can cover the entire 100 point from 6700 to the 6600 within one day. Okay, fairly possible, easily possible, right? The bearish side, yes, the bearish side is open. The bearish side for now will remain open to the 655x, this range. Why? Because there was a technical obligation. S&P 500 has partially fulfilled the technical obligation because it came down, okay, it sustained at the 655x, then it moved up. Okay, what is the absolute condition, okay, to fulfill this the obligation is that it should trade below 655x, and should trade below, should remain bearish, should come into the short-term bearish cycle. Okay, the short-term bearish cycle. Short-term bearish cycle means for about 1 week, right? But now that condition will be fulfilled if the S&P 500 comes down from here, okay, it takes like 3, 4, 5, 6, 7 days. It loses the 655x, remains below 655x for 1 to 2 days. Then also this condition will be fulfilled. This obligation will be fulfilled. Okay, and there is one more condition here in the bearish side. It can actually trigger a good bearish movement or good fall. The condition is that the low of this candle was 6551. Now whenever the S&P 500 comes down, it will try to avoid hitting or breaching the 6551. Means it can come down, it can hit the 655x. Okay, there is a good this is the heavy support zone in the 655x, but it will try not to breach the 6551, because breaching the 6551 will bring more bearish sentiments and can actually trigger more fall, around 2 to 3% more fall. Okay, so it will, whenever it comes down, it can come down to the 655x, okay, but will try to avoid hitting the or breaching the 6551, and then it comes down, sustains, fulfills the condition again, okay, and moves up. In that manner also the 655x condition will be fulfilled, because that will be the second time, okay, when it will be coming down and testing the 655x range. Okay, this is the heavy support zone that is there in the 655x. The heavy fall or the bearish movement of the short-term bearish cycle will be triggered whenever it breaches the 6551. Breach is one thing, it can breach, okay, but it recovers and closes above 6551, means it will remain in the bullish side, in the bullish condition. Okay, it breaches and closes below 6551, that will be a good or a heavy bearish condition, and we can see then a gap down open. Immediately after open, it comes down in open equal to high condition, and then a fall and fall. Okay, good bearish movement, good fall. 6551 in this manner will tell us whether, means how much fall is allowed or how much fall will be there. From the current all-time high to the 6551, it is around 2%, 1.8%. Okay, it moves up further, around 2% fall. Okay, as of now that will be okay. Before it reaches to the 6551, the S&P 500, Okay, the 6600 psychological level, though there is a good zone in the 662x, a very heavy zone in the 662x. Okay, before that there is a level. Okay, that is also there. Okay, because S&P 500 was holding, sustaining. Okay, and because of that level, actually the S&P 500 moved up. Okay, so coming down, it will find support at that level, then will come down, will find support at the 662x heavy support zone. Okay, when it comes down, then 6600 psychological mark. Okay, why? 1, 2 and 3, especially on 2 and 3, Tuesday and Wednesday, on these 2 days, the S&P 500 marginally saved itself by 11 cents and by 35 cents. Okay, so when it comes down, it loses. Losing is not a problem. The closing, if the closing is seen below 6600, let's say the closing is 6599.99, this will also fulfill the condition because it is below 6600. Okay, then there will be fall. It will trigger the fall. When it triggers the fall, then to what? Then to 6551. It will come down to the 6551. Then the condition of the 655 will be applicable. A breach of 6551. Okay, but a closing is above 6551. Okay, S&P 500 intraday loses the 6551 but recovers back and closes above the 6551, means S&P 500 is trading under pressure and is heavy and is susceptible for a fall. But a breach and a closing below 6551, when there is no recovery of the 6551, it will trigger good fall. Good fall means 6400 range, 6300 range. A very good fall. Okay, a short-term bearish cycle confirmed will be there. Now this short-term bearish cycle will convert into the long-term bearish cycle, the correction, or so it will depend on the GDP data. Okay, and then finally on that the inflation data. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates. And if you have not yet joined my Patreon community, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, hit like if you have liked this video and subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.